I'm going to try and answer the question in a slightly different way, and I relate back to the point in time when I was trying to explain to our group CEO what blockchain was. And I went through these 5 attributes: it's cryptographically secure, and smart contracts, and so on and so forth. And he said, why is that different to what we have today? And I said, it isn't. You can do all of that stuff today, so you don't need a blockchain. So to all of you in the room, blockchain, you don't need to bother with. And there's one reason why you need to bother with it, because it does all of that in one place. Whereas all of those attributes that you can do today, you're doing in silos, and you're creating friction, and you're creating opportunities for mistakes, and so on and so forth. So that's the way I described it to him, and I think he got it at that point, because he's quite a deep thinker. But to sort of kind of take the opposite of your question, when would you not use it? You're not going to use it when you're seeking a competitive advantage, and you don't really want to share that with someone else, otherwise it won't be a competitive advantage. So you're not going to use a blockchain in a sense when you're trying to benefit your own company singularly from it. And the way B3i has approached it is actually we're trying to solve a problem in the market. This problem, particularly with our first use case, is around the friction, what I was talking about, and trying to resolve that issue for the whole market, not just for an individual company. So tend not to use it in the sense of a singular sort of personal company approach. Just to echo slightly what you said, I mean, from the customer's point of view, that end user, does he really care who gets into disintermediated? The answer is no, because if he's getting something better out of it, he's very happy. So actually, as well as said, it's up to the intermediators, whoever they are, to actually take advantage of technology and do what they do better than they did before, thereby giving the customer a better solution. But the reality is, if we stop to think about who pays the bills, the customer, they don't really care who gets into disintermediated or not, as long as they get a better deal. So I would tend to keep that in mind. I sometimes use the analogy of banks, and it's maybe not a perfect analogy, but in the context of having your own data and having control of it and putting it into a data vault, where do you put your money? You put it into a bank. Mm-hmm. And when someone needs some of that money, you give them a direct debit or have some kind of mandate to enable them to take what they need. And I think in the world of insurance, where customers don't trust what the insurers do with their data, the analogy there is if I could lock my data away and only let the insurer have what they need for that moment in time, and then it expires, I think that would increase trust enormously with customers. So when you think of these concepts like data vaults, it's not that far removed from the banking system. Now, okay, I know you're going to say the banking system isn't perfect and money can go missing and all sorts of things can happen, but there's a real opportunity that I think would resonate with customers. First of all, governance could be more efficient, and blockchain can help. Okay, so that's a good thing, and you touched on that. And then the second thing you mentioned was standardization. I think governance isn't just about making a whole lot of rules. I mean, I know data standards are rules in a certain way, but part of the governance around blockchain is about agreeing the data standards, the standards through which this information will move seamlessly from one block to another, blockchain to another. So that in as much as part and parcel of the governance. And so that is needed. In fact, if we've only got our head around data standardization, years ago, we would probably have avoided a lot of problems we have today. But at least the concept of blockchain does engender that point. The biggest challenge to really getting blockchain a lot of traction is mindset. I often talk about the 3 L's, the legacy systems, legacy products, but the biggest problem is the legacy mindset. So whether it's a not invented here syndrome, whether it's I don't understand it enough, whether it's a load of hype and it's really never going to happen, for me that's the biggest challenge. And in fact, the way we're approaching overcoming that is through education. There's always 3 of everything. And in this case, it really is about education. Why you're sitting here is to learn more about blockchain. And it's not about the use cases. To give me examples of use cases, what I hear all the time. No, you don't need to hear about use cases. What you need to know is what blockchain has the potential of doing to help you solve the problems that you've got on your patch. And as soon as you can start to understand those very, very basic concepts, then you can start to think of problems that you can solve. And then you can go and bang on the doors of your tech teams or your innovation teams and say, fix this for me and have a go at it using blockchain, rather than you going away and inventing some toys which I don't really have any interest in. We've got Tim Marlowe sitting in the room, and Tim's an authority on autonomous cars. Tim from Ageas UK. I've worked with Tim before, and the concept of autonomous cars has been around for quite some time already. Yeah. And I remember 5 years ago we thought it was 30 years away, but now it's 2 years away, or it's even on the road today. And I'm just using that as an illustration with something new that comes along. There has to be a lot of experimentation and testing and education, understanding, and you even have to talk to regulators and try to educate them as well to this new world.
And there are some downsides to blockchain as well. It is incredibly network and space hungry.
And so are autonomous cars.
And so
they're a network. They talk to each other because that's how they don't bump into each other. But I'm just using that as an analogy that when something new comes along like that, it just doesn't suddenly fall off the cliff and suddenly instantly everyone's got a blockchain. It is about education. It is about experimentation. And the sooner you get in there and start doing that, the sooner you start to understand how it works and what all the pitfalls are, and making sure those pitfalls don't become big pitfalls. Yeah. Because the last thing you want to have is a whole bunch of cars crashing into each other. In the same way as you don't want blockchain to start losing data all over the place.